people fall into two camps. They love it or they hate it. The people who love it will run the whole business and will be your best team member ever. People who hate it are the people who don't do anything and you're overpaying for their salaries.
Hey everyone, welcome to another episode of The Adventures of a Real Estate Investor. I'm Suzy.
And I'm Michael, and we're excited you joined us for this adventure.
So today's very special guest is Mike Taravella.
Hey everyone.
I'm so excited that Mike is here with us. I had the fortunate, I guess is the best way to put it, time or experience with Mike. So I met Mike like 3 weeks ago, and GoBundace put on just an asset management workshop, I guess is the best way to put it. It was super cool. It was like most of Monday, most of Tuesday, I guess. And it was just all things asset management. There were 12 people, 15 people, members there?
Yeah, in that range. Yep.
Cool. And it was fun. It was super collaborative. Mike had so much great information to share, right? And what was cool is that within this space, there was a lot of vulnerability. So then it provided, right, a safe space for people to open up more and be like, hey, this is an actual problem that I'm having. Let's deep dive on it instead of everything that I have going on is great. So I do appreciate you leading that. And I appreciate you being here with us today. And actually, sorry, one more fun fact. So Mike has a significant other whose name is Suzy. So we have a Mike and Suzy duo, which is the coolest thing I've ever experienced in my life.
Our podcast about real estate's coming soon too. It'll be just an exclamation point at the end of Suzy and Michael's podcast. So it's just nice. You'll find a Mike or Suzy in multifamily. We just don't know which one.
That makes me so happy.
Sweet. Well, before we get started, Mike, would you mind just sharing with our listeners a brief background about you and how you got so involved in asset management?
Yeah. So I think the biggest thing to my story is I was pretty much told to go to the traditional route of going to college, go accounting because it's the safe job. But what really kind of pivoted me from doing the traditional public accounting to corporate was I started a screen printing business in college at Michigan State, and we did 20 grand in sales in the first 9 months without marketing. And so literally it was buy a printing press off Craigslist, do all the shirts for every student org at Michigan State and Central Michigan. And that was the coolest point where to be like, oh, we can make money off of our work and just the leverage of our network. But then we just didn't have any systems. And from that point on, I was like, Suzy would love this. It's just everyone needs to know what they're doing at any given point, whether it's in finalizing a sale or a shirt or are we printing? And so that was kind of the kickoff of the entrepreneurial mindset. And so literally in public accounting was learning financial audits and just what could go wrongs. And that point on just became a fixer of systems and businesses, worked for Dan Gilbert, whose family office runs pretty much Detroit, from tech startups to esports. And I was just seeing what he was doing in downtown Detroit and making an impact that I wanted to do that as well. And then did 2 single family homes, learned about commercial real estate for about a year, and then worked for a family office in Knoxville with 1,700 doors, and then spun off into my own venture where we're buying assets and have 670 as the GP, but also asset managing another 1,000 units across the country, just finding those lovely systems and reestablishing boundaries, as Suzy would say, because she doesn't mention on the workshop. She's still half the show with just teaching other men how to create healthy boundaries and communication channels. And so we're teaching other managers and owners how to do the same. So yeah, it's the high level overview, but just systems, processes, and the numbers don't lie as people try to make it. But yeah, we're just trying to help owners and investors get in deals with good people and be as transparent as we can with it.
Yeah, absolutely. And I think what I want to point out here is that you set up these systems and processes, and then you said that you're also asset managing for other people across the nation, right? Once you have a good set of systems and processes put together, you can then apply that to any kind of property management company, right? As long as their property management company is not criminals.
And has boundaries.
Yeah.
Well, yeah. And we've just seen a lot of fraudulent and negligent work. It's pretty wild, no matter the size. So I don't want to come in and a small property manager has the same risk as a big one, and you just have to follow up. But we had 2 weeks to switch management companies in Oklahoma. Then the new manager, the whole team quit for a month, and then we had to find new team members. And this is all within 45 days. So it is,
Wow.
this stuff can happen to anyone. And kind of what we've been trained professionally is what could go wrong and just really make sure we're measuring up for it. Because in multifamily, yes, it is a safer investment, but there's still that if no one's answering the phones, no one's collecting the money, you're going to have a bad time and just live. It's going to feel like a living nightmare. And we're just here to help operators, LPs, investors, whomever, because it just, when you're in those bad deals, you just feel so alone. And we don't want that to happen to anyone.
Yeah.
Well, I mean, yeah, that's like an awful feeling, right? But why, in your opinion, why do you think, and I mean, I guess we might know the answer, but I still want to hear it from you. Like, why do you think that, like, there's so many like workshops and masterminds and everything all on just acquisitions when, right? Like, in our opinion, and I'm sure in your opinion too, the bigger part is asset management. Why do you think that's like not talked about as often? Because I think it's sexy, so I'm at a loss. You know?
Well, we're the select few that are like, we want to run into the burning building versus everyone's like, oh, that's just, everyone wants the allure and the sex appeal of getting 10 million likes for closing a deal. But those are the same people that I was just follow up with 6, 9, 12 months later, be like, hey, how's it going? Because literally in those chains, once the communication stops, that's the red flag where I'm like, oh, that's a problem. But I think the biggest thing is just the value creation. It's really easy to collect an AC fee and move on. It's really easy to just buy the deal. Easier, I should say. But I think overall, like the asset management, super easy when rents go up 20% and interest rates are near zero. But now that we're in the nitty gritty piece of it, where I think we're back to, I don't want back to a reality where rents usually go up 3%, usually. People want to be sold. The property managers had a lot of leeway of just posting and getting results. And so it's like a type 2 error versus there's still systems and processes that need to be tweaked and fixed from third party, which is very hard. But if you know what you're looking for, it doesn't have to be that hard.
Yeah, and I totally agree. I've mentioned it several times before on the podcast too. I said like 2023 was the year of the asset manager, right? We started to see the shakeout of all these people who were just reliant on the 20% rent growth, near zero interest rates, where you could flip something in 12, 16, 18 months or whatever and get a 30% IRR and things like that. And now you're like, people are like, wait, what is this actual asset management? You have to actually like, do things, right, to increase the property value and stuff like that. And so like, you really saw who the real asset managers were. They shone through.
Who did it?
Did it in 2023. And now you see that in 2024, likely through the end of the rest of the year, with interest rates staying high, you need to work on value creation as that cap rates have expanded and things like that.
When you were also, right, like introducing yourself, like you hit on a point of like you also come in, right, and asset manage for others because it was a clear distinction of what your GP is, but what you're asset managing. How did you come to like get into that space? And what are some things that like operators can avoid so that someone like you doesn't have to come in and asset manage? I mean, if right, it beyond like they really want to hire out an asset manager, right? That's totally fine. But like when people are in distress and like, okay, this is something I can no longer do because I'm not, it's not clicking for me.
Yeah, I think I will say how it started was a complete accident. And in 3 months, we went from like doing a couple hourly calls with an investor to 1,000 units. And I think we have kind of two camps. One, it's like the, oh my God, I'm going bankrupt. The world is ending. And then there's another camp that's, hey, I'm a good acquisitions person. I'm a good investor relations person. Perfect. Love the thumbs up. I don't know how this happens, but I know I shouldn't be asset managing anymore. And those are very different, two different camps because I think, and it adds validity, right? Because like we talked about the systems, and I think it may be controversial, but I think people overcomplicate asset management because in 3 metrics, I know where the problem is. Physical occupancy below 90%, economic below 90%, and then cash in the bank. And people try to overcomplicate it with all the numbers. And it's like, if you tell me those 3, we'll get to the bottom of the problem in no time. Because if you have no one in and no one paying, who cares if your eviction costs are a little bit high? You need to recoup that through income. So I think if you're in the 911 though part, it's, I'm happy to help just offhand. But I think to overcome a lot of the issues, the first rule of real estate is location, 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 and buying in good markets where there's higher median family incomes, no flood zones, ideally for insurance purposes, and just where people want to be. Because I think a lot of people got caught away buying that 1960s product in a rougher area because it was, quote, the path of progress, and the path is still trying to be progressed.
Yeah.
It doesn't happen in a 3-year business plan. It could happen in 10 years, right? So
Yeah, exactly.
So you're asset managing other people's assets. across the nation. You know, you're implementing those systems and processes. What are some key things that you see when you go out and are you going out and getting new property management companies like on-site managers? Are you like vertically integrated or and you're hiring that out, or how's that working?
Yeah, so the asset management, we're relying on the property managers. In some instances, we've had people where the management fires us and it was like, you need to find a new management company in 30 days. Other times it's, hey, we're taking management in-house. And I have experience with vertically integrated. It kind of just depends on the portfolio and the level of execution. I don't care. You could have the sexiest budget, but at the end of the day, I care about execution. And like, for example, like one of our deals, our 36 unit that we paid out 10% year one. Year two, we lost 153 grand from negligence. And then I almost like lost it on my partner because he goes, do you think it's the market that's the problem? I'm like, no, we averaged 130 days of vacancy on 20 units. Like, what are we doing? That's not the problem. So I think it's just, you want a management team that will execute and do what they say they're going to do, because asset management is just being the squeaky wheel until results happen. And so the biggest things we've seen coming in is vacancies not getting filled fast enough because we're not marketing or priced correctly, or CapEx is taking too long. And that could be a function of not the right team, or it could be just not having the right expectations in terms of cash or the vision of the business plan. So that's why, like, even after our conference, Suzy helped me a ton of just saying, hey, I could pour 200 grand into your property tomorrow, but if we don't have the team, people in place. So I'm even going to owners and just getting their level head of like, what do they expect the turns and capital calls to be? Because these are smaller JVs, these aren't larger syndications sometimes, but we just want to set those expectations of find the problem and then have that tough conversation with the owner of like, here's what it's going to take to get it fixed correctly. Because I look at it as I want the owners to be hold these forever. And so we're not putting band-aids on problems. We're fixing the whole root of it.
Yeah, which sometimes can be like a really big deep dive, right? But like if you don't have that conversation at the beginning, because something I say like, oh, I want to, increase occupancy. Okay, cool. Like we're all on the same page for that. But like the results that get there could be two completely different things, right? And that's the worst part, but not even two, right? Not even between you, Mike, and the owner, like also with the onsite, like the onsite could be like, okay, well, you told me to do it. Like I filled it. Like, oh, no, right? Like there's just so much more that goes into the communication behind it all and just making sure every single person is on the same page all the time, which means you have to talk a lot, but that's okay.
Exactly. Because the manager may see only $9 in a bank account, but they need 20 units leased. And they're like, do I just cut the rents in half and lease it up? And it's like, no, the owner plans on putting X amount of dollars in. So it's just like, it's a lot of just level setting expectations and just over communicate. Like if you're firing off emails, like I tell our team, it's like, I know as like the consultant, I'm part-time therapist, but also like optimizer. So it's, if you need to yell, that's fine. But at the end of the day, I know my job is to be that even keel operator to find the problem and fix it. So it's all good.
Yeah. And you like go into some of these properties, right, where people do think they're heavily distressed. Have you ever come, I guess, across where it's not? And you're like, hey, like there's is actually just like one pretty big fix. I guess you said like 911 versus the other thing, but like, how do you then teach going forward? Because you're like already in it now, right? So like, what do you do next? Do you just get it to a place where it needs to be and let them take over again, or how? Or are you
no
the rest of the time?
We try to take, like if it's the 911 and they're trying to sell, like that's one thing, but we always go into partnerships. We fee manage to start as an example so that existing group can feel comfortable with our operations. From there, we have bigger discussions of, I don't want to partner with people on one-offs. I'm a big Naval Ravikant fan, and compounding relationships is the biggest thing. So I want to do, when I agree to partner on a deal, I want to do 10, 20, 50, 100 deals with this person over a lifetime, because getting those trusted individuals is so hard, and it makes life so much easier when you have the right people in the right seats. And so we do the fee managing, and we hold it the whole time because I don't want my names on it on top of our teams. And I just want to make sure, like, even after we get through this, that we can help them just managing. And a lot of it's just consistently measuring physical, economic, our marketing leads and our bank accounts. Because then that's when you can delineate that's when you find the errors and you can stop it right away.
Totally, 100%. Just curious. I mean, other than the property management system, PMS system, like what are some ways, and just like looking at it month to month, whatever. Like, are you using any other tool sets in order to, look at those month to month variations and things like that?
Yeah, so on a weekly basis, we look up physical, economic, guest cards, which are general inquiries on the property, and applications. Because the first hurdle, if your physical occupancy is below 90, your marketing is an issue. Well, now I found CapEx, do you have available units?
Yeah.
If so, then it's a marketing issue, and it's either price or promotion. So if I can't find you on Google, it's a problem. And so we've been implementing Google Business Page, where we post 2 to 4 photos and updates a day through the power of ChatGPT, creating that description. And then from there, we've gotten 2 to 4 times the interactions than we would by just having a basic Google Business Page. So you can hire VA to do it. It's $800 a month, and within 6 months, you'll start getting leads. So that's like a very underrated thing we found in the last 6 months. And then from there, monthly, we measure month to month variances of $500, depending on the size of the property, but generally $500 and a 10% change. And this allows you to find if property managers are leaving bills out, or if there's like a large influx of like, hey, what happened here? So those are kind of the month to month things. And then we always look at an annualized T12 per unit, especially with insurance and everything going up. We want to just make sure that's how you can quickly find leaks. And especially if you're underwriting and you see a property with utilities over 1,000 per unit, there's leaks. So those are kind of the big things that we look at. And we also, friendly reminder for asset managers to check to see what your property manager is charging, because we found property managers on accident charge based on accrual, not cash basis. So the more you know.
Yeah, no, 100% the more you know. But even with everything you just said, like it even goes along with like when you said like finding the right partners. It's not just like finding the right partners within like the GP or the deal. It's also finding the right partners like with the property manager, right? Like some people are so, nervous, to fire a property manager. But I'm telling you, like when you feel the ship sinking, like it's already full of water. Like you needed to do it a while ago. And so really like trust that. I know we probably want to give people the benefit of the doubt, but if they're not understanding, they're not understanding, right? Just like move on. Because these are all things like what you just mentioned that are super, super important. Like you want to know that, yes, and I know sometimes it can be accidents of accrual versus cash with like the property manager there. Like that might be an easy fix and one you can be like, okay, back up, I need a refund. But like if they say that they're posting photos and they're not, right? That reflects in the marketing. If they say they're evicting people and they're not, that reflects with the economic occupancy. Like you want to really pay attention. Like you want the property manager really on your side.
It's hard. I mean, we're also like a property manager wears so many hats, right?
Yeah.
They have to be really good at sales, closing deals, right? They have to be really good at managing a maintenance person, managing like a make ready plan and everything like that. And then also like managing all the financials, right? And each one of those takes a different personality. And it's like, and we're asking so much of the property manager. So it's also like making sure that you give them grace, in certain areas.
And it's one of the hardest jobs. Like you're getting yelled at from residents, vendors, work orders.
Us.
Like you're just getting yelled at for, us.
Yeah.
And so it's like, I know it's hard. And I think there's some owners who are like, but I want the money. And we're like, yeah, that's great. But you're going to just like, no one's going to want to work with you. And commercial real estate isn't that big. So it's easy, especially easy on podcasts as an asset management and go, just do it. And they're like, yeah, answer 100 calls. Everything sucks. You're the villain. And so I think it's just making sure that you give your property managers grace. I also like thank them because like they're responsible for so much and the impacts they can make. Like $100 difference on a lease could be $500,000 in value, because if you extrapolate it over 12 months times units divided by a cap rate, that could be millions of dollars, $1 million swings just by one clerical error compounded. So give some grace, but also don't just be rude and yell at them all the time.
Right. And then one other thing too is like we just went through, in the past earlier this year, actually, we removed one of our property managers, but like we had put together a bunch of data, right? Like here's all the data, literally looking at expenses, income collected, everything, marketing, everything, look at all that. And it's like, we changed the maintenance, we changed the regional, we changed this, change that. Is like, this is the only person left to change. So we shared that data. It was like presented it to the CEO of our management company and said,
I would pay money to see Suzy's dashboard and appendices to that conversation.
I mean, it took a lot. Like it was a huge email from us, but then Like you could tell right away. You could tell right
It was
away,
a
like,
meeting. Yeah, we're meeting and I was showing all the data. And
yeah, and
she's
she
like,
just like, you could tell right away. She was like, I can't argue this. There's nothing to argue against. Like it all shows here, even without word. We didn't even need to have a meeting.
I didn't say, well, we didn't say we need to fire this on-site manager. It was like, here's all the data, and then let her draw the conclusion herself, right? So it made it think like it was her idea, right? So, which is more powerful. But I guess what the point of that is, making sure that you're tracking all the data properly as an asset manager, the people listening out there, right? Tracking all the data properly and then seeing what other variables are in place, right? Did you change your regional manager? Did you change your maintenance personnel? Did you change XYZ? Or is it the on-site manager and you need to make a change there? Yeah. Just making sure you look at the data and analyze the data that way.
And like something else too with this, right? Like some owners think that the property manager is also the asset manager, which, right, the three of us know that that's not true. But there are
You're going to have a bad time if you're listening and you think that. You're like, yes, you're going to have a bad time.
Yeah, totally. Yeah. I mean, that's when properties really do not do well. But like there are blurred lines, right? Like Mike, we talked about it at the workshop. Like there are times where I've had to go in and turn units because, man, the property just needed like a lot of help. Was it like the best use of my technical like hourly wage? No, but it had to be done for the investors in the property. And for you too, like going in to that 36 unit, right? It's not 38, it's 36. Yeah. And being
36,
like,
yep.
These are the things I need to change right now. Like you just have to go and do it. And sometimes depending on who the property manager is too, like you really like as a leader have to show them. It's like, okay, this is the only way it's going to get done. But then it's like magical after if it works.
Yeah. To that point, I got called. A resident came to me on that 36 unit, and it was so bad I had to introduce myself as the owner. It was that bad. And I'll never forget, a resident came up to me and they're like, see that guy? He called you a slumlord to us. And so I went up to this person and I go, we're going to have a serious conversation. And if you lie to me, we're going to have a much worse time. So be 100% honest. And I called him out and I was like, did you call me a slumlord in front of residents? And he said, yes. And I go, good. Thank you for being honest. But this is why I'm here getting it fixed. And your boss, who's lied to me over the last 6 months, isn't. And literally in 3 months, we went from 75% occupied and like losing probably 200 grand to 95% occupied in 3 months and fixed and 90% economic. And so I had some choice words for the boss. But at the same time, I told my investors from the beginning, if push came to shove, I would live in these units. I was there 3 days a week. I think I handled 25 residents calling me crying. And I care about this so much more from just like a numbers perspective, but like these are people's homes, and the feeling I had of residents feeling helpless, showing me work orders from Christmas Eve, it broke my heart as me being the owner of this, because like these are people who feel so hopeless, and it was on my watch, and I will never let that happen again, because these are people's homes, these are residents. Like we were paying 16 grand a unit for a turn because the property manager wasn't paying the other contractors for jobs. So it was just the most insane.
Yeah, it was.
It was insane. Like literally there was like just popcorn ceiling molded down, like units not turned. Like there was nails sticking out of door handles, and that was the show unit. And I'm like, I had like a panic attack and like just like yelled at everyone. I was like, if this is the show unit, we're done.
Right?
And
exactly.
So we had to refix everything.
I don't trust you with anything else. Stop it right now. It's crazy.
Oh, I told him that. And that was even the fun part. I go, I don't trust. I'm like, I could tell you like January 12th. I do not trust you anymore because you lied to me about filing this eviction 5 months ago. Everything you do has to be CC'd with that person via text, a picture of it done, and emailed to prove to it. And we got it fixed. And he said he never had an owner come after him like that. And I'm like, you never messed with an owner like me, because these are my investors that have entrusted me with their hard-earned money, and we're going to get it fixed. And I would like to say that's the last time a story like that happened, but we've gotten chief marketing officers let go and leasing managers because they were not transparent and didn't live to our core values, and now they're in a better place.
Yeah.
So who was that guy who called you someone? Was it on-site manager or something?
Yeah.
He's the number 2. Yeah, he was like the assistant. It was a smaller operation, so he was like the number 2. And now he's kind of, because of that moment, I helped him get a new job where there's more training. And in the first month, because of me just kind of helping him through and just showing him from an ownership side, the first month of his new job, he became the employee of the month.
That is so sweet. That makes me so happy.
And we're like, it's like a mentor-mentee relationship. And he just like, because when you're in the middle of it, you don't see the chaos. But once you step away, we debriefed of like, here's what happened and why. And now he's like kicking butt and taking names and doing it the right way.
Awesome.
That is awesome. Man, I don't know. I mean, I feel like the workshop wasn't enough time, which means this podcast definitely hasn't been enough time. like
I
appreciate.
guess we have to see each other again.
Yeah, we
So
do.
before we wrap up here, I do want to ask one question. What was your biggest takeaway from the workshop?
Oh yeah, and that's what was going to be my goodbye note. So that works perfect.
It's like you guys have done this before.
Yeah, same way.
I think
so we know each
I think the biggest takeaway from the workshop, I mean, I know it may seem like I'm pandering, but Suzy literally debriefing on how she sets expectations like shook me, because I know in my business where I'm scaling it and hiring team members to do the work that I'm doing. So it worked from like me to owners, me to my investors, but now even to me and my employees. And because of Suzy's expectation wake up call, it made me realize I had to let go of a team member that wasn't hitting our marks as core values. But at the same time, I poured into a newer team member that we hired that week at the conference. And literally Friday, she's like creating a dashboard that I didn't tell her to do so she can compare week over week on all the things we manage, and added her notes and 2 cents. So Suzy just expectation level setting on top of like communications was huge. But also I think just a lot of people are losing vacancy and just managing your rent roll. So we have properties in Denver and we want leases to expire Q2 and Q3. And so even though you may not be getting the rent increases now, if you can optimize so they end in the summer, life gets good and you will feel it's a lot of work to get to that point. But once you're there, when people give notice, you're like, I'm in the summer months. I did the hard work. I don't have to worry about it and life gets good.
Yeah. I mean, like the proactive part makes a huge difference. But actually that can go for both statements, right? Like if you're proactive with the role and everything that comes with it, right? Like the property manager should really succeed, or right away, right? You'll find out that they don't. But then even with occupancy, delinquency, actually just everything, right? Like if you're being proactive with it, like, yes, there will be like the ebbs and flows, but you'll catch things sooner than you think if you're just paying attention.
Yeah, I'm sure you guys, for the listeners, if you haven't read Traction, essentially a big premise of the book is you measure every KPI. So we're doing it for a marketing person all the way down to executive assistant. And people fall into two camps. They love it or they hate it. The people who love it will run the whole business and will be your best team member ever. People who hate it are the people who don't do anything and you're overpaying for their salaries. And you find very quickly that people don't like to be held accountable. And as a former auditor, no one likes it. But you as a business owner has a fiduciary responsibility to you and your investors, the greatest thing ever. And just even we've boiled it down to even net promoter scores. And we tell our property managers, we're not taking it for, we all know residents may not love us, but we look for common threads and themes. And even 10 out of 10 times, what happens is the net promoter score will go high. And then once it goes down a little bit, that person has 30 to 60 days as a property manager because they're probably quitting. And it's worked out every single time. Because literally we've lost the 2 managers who were on site when the NPS went from 80 down to 0. They left in 30 days.
Wow.
Fascinating. It's lovely what data will do.
Yeah.
No, like I know it is. Like it's fascinating, right? Like because it really tells all. But again, like we appreciate you being here with us today.
Yeah.
Like, it's a joy to see you again. But before we end the show, how can our listeners get a hold of you? Because I'm sure a lot of people are going to come knocking.
I hope so. At Value Add Mike, Instagram, Twitter. Twitter's an underrated platform, as is every podcast. YouTube, Mike at MikeTaravella.com to reach out for any email questions. But yeah, just here to add value as much as I can. And every once in a while, crack some jokes on stage for open mics. So
yeah, which makes me happy.
That's coming too.
That's awesome.
Awesome. We'll make sure all that's in the show notes for sure.
Yeah.
And thanks so much, Mike, for joining us. It's been an absolute pleasure getting to meet you finally.
Right? Instead of just talk about this second mic that I have and know.
Or get a Facebook call, which I didn't know was an option until Suzy entered my life.
I was like, I need his attention right now. And it worked. In case anyone wanted to know, if you need to get somebody's attention, call them on Facebook Messenger.
On a Saturday. 100% chance they'll go, what is this?
That's awesome. Cool.
Well, thanks, Mike, again for your time. I appreciate it. Until next time, explore more, adventure awaits.